So I think those things help. In terms of the actual business plan, well written, please, make it easy for the investor.
Not too long.
Not too long. Tell a story. No spelling mistakes, please.
Plenty of pictures?
Yeah. Some break it up a bit, make it easy to read and not just great long blocks of text. And other little things you can do, I think, if you are going to say, you can talk to my customers, if you can come along and say, I've already cleared this, that you can talk to these customers for a reference, that's helpful. And if you're quoting market data, please put in where it came from. Put in the references that says this data was obtained from this source. And all of that makes it easier for the investor not to have to go out and then or come back and ask you where you got the data from.
And the more examples you can give of comparator companies as well, particularly for exits, is really important. So if you've got 2 or 3 company examples in the same sector, where they've been acquired for X million or whatever, put that in the plan as well, because what that does is it gives the investor confidence that they can also achieve an exit with your company.
And while we're at it, what's your company going to be valued for at the point of exit? So it may be that the acquirer is buying it for revenue and cash flow purposes. It may be because you've got patents and they can see that they can use those patents strategically, and actually the revenue won't matter. It's the strength of the intellectual property position in 5 years' time that may well be the thing that they're buying you for. And it may well be to do with the community that you've built. So we've seen that companies have built communities of users which are of value to people who want to sell them other things. But going back to the value in intellectual property, there was a case not so long ago in drug delivery. It's a company with about $65,000 of revenue sold for $65 million to buy the company because of the strategic positioning and importance of its patent portfolio. So, where are you going to put your effort? There's not much. You don't have to work so hard at getting revenue streams and clients if actually you're going to be bought for the value of your intellectual property. So that tells you where to focus your efforts in order to work out how to get the best exit.
I'd like to add that I think it's really important that you profile who you're meeting. I think that's one of the most important things to do. Know who you're meeting. So, for example, one of our angels, if it doesn't fit on an A4 sheet, he's not interested. That's all he wants to read. One A4 sheet, great, he either invests or he doesn't. Whereas Cass, it was a very detailed process. They had a lot of things to qualify. So we knew we needed to come at them with a lot more. So look at the individual meeting, maybe understand the persona type. Are they a detailed person? Are they more what are they interested in? What do they like to read about? And I think it's like any sales pitch. You need to do your homework, and because you're making a sale.
And if you can find out where they've been burnt in the past, if they've had a bad experience with this kind of company or in a particular technology, then the likely is they're carrying that through in the front of their brain and saying, "Oh God, this looks like something that I lost a lot of money on 5 years ago." So,
and be strategic as well. Before I met one of the VCs in London, I took a chat with this Gina Bianchini, who's the founder of Ning. It's like we build social networks on their site, and kind of raved to her about Builder Brand. She says, "Yes, I really like the concept today." And she actually rung up this VC the night before we met him. Just I didn't really suggest it, but maybe, and that really helped. And that got us the second meeting with all the VCs within 2 weeks to present to the whole company. So be clever. Look for the patterns. Look for how people are connected.
And do they leave it to the last minute to throw in a wobbly just before you're about to sign the deal? They put some extra condition or something.
I think our process was so long that I probably did that actually. I came in with I brought another investor in right at the end after the shareholders agreement was put together.
Works both ways.
Yeah.
And one final question for the gentleman there, and then we'll get you to do your pitches. Yes, sir.
Simple. Is there a way, or is there a place that we can easily access a list of VCs or business angels that you know about?
Well, there's from your perspective, where did you find them?
Mine were all intros. I just like I said in the presentation, I networked for about 3 years, and I actually met a lot of the VCs socially. I went out drinking with them. I've been partying with them, and so I'm reasonably familiar with them. I didn't mean to say they were going to invest, but they knew me, and all the VCs know each other. So we were getting referred. So we met one VC. So well, it's not quite right for us, but we like the idea. But we're actually getting intros from VCs to other VCs as well, because this is kind of more suited to their fund and what they've invested in previously. So it's actually. But one thing is I did pull down a list of all the angels and VCs in New York. Which is, I think, quite handy because they know a lot of the VCs in the Valley as well, and angels, and in London. I documented everyone I've met, so I don't mind sharing that. But
there is,
I can't make intros until I know a bit more about what you're doing. But
the BVCA, which is the British Venture Capital Association, is a place to start. It's it does list everyone. It does list the kind of deals they do. It's not the most it's not going to help you narrow down exactly who you're going to see, because almost all VCs say they invest in tech. So, which one do you go for? But it might be a useful place to start with. And then, as Justine said, it's about getting out into the places where VCs network, and then you'll get to know the kinds of VCs that you should start approaching.
Some angels, though, some high net worths don't actually want to maintain a high profile. So some, in the business angel community, some are out there and sort of quite high profile, well known. Others really are quite retiring and secretive, and really just want to invest from behind the scenes. So it's maybe harder to get to all of the business angels. But in terms of referrals, people are not going to refer you unless they're comfortable that that referral reflects well on them. So I wouldn't refer anybody unless I felt that I was confident that they say, the person I was referring them to would say, that was a good lead, thank you. I don't particularly want a situation where they say, what do you send them to me for? God, what a load of rubbish. So, each referral has to pass a hurdle of, would I be proud to hand this reference on to somebody else?
Seed Camp's a good place to start as well. Seed Camp. And I think they host the mentors list. For previous years, I was a mentor one year, and actually I was the first year I came into contact with Seed Camp. I was going to enter. I didn't. I just actually managed to raise the angel money from the arena before I submitted the form. But it was a very good sign-up process. I learned a lot from going through the form. And then the second year, I was a mentor, because I had kind of my branding knowledge. I was asked to be a mentor, but actually during the breaks, I was pitching Builderbrand to all the VCs
Nice.
during the mentorship. So just putting yourself in the right space helps. And there was angels there was other entrepreneurs, there was VCs. But Seed Camp's a good place to start, I think, for finding finding people in London. There's also Y Combinator as well. That's a good startup incubator. And I know I actually came into contact just while I was surfing the other day in Helsinki. There's a crowdsourced funding for entrepreneurs. I tweeted it from Builderbrand, if you want to have a look. Our Twitter feed, the link's on there. But just get online, see what's trending. Start following founders and VCs on Twitter. Nick Brisbane is at DFJ Esprit. He runs a blog called The Equity Kicker, and he's probably one of the most connected VCs in London, and he's very accessible. He mentored me as part of in the beginning process of the fundraising. I remember the first time I presented the pitch to him, I completely froze and couldn't make any sense of what I was presenting. But it was really good and took me through that.
Brilliant. Well, I think, we'll call the Q&A to an end. So thanks very much for these four kind people for putting the time in.